In this presentation, we're going to continue on discussing acquisitions, this time talking about other intangibles other than goodwill. Get ready to account with advanced financial accounting. We are talking here about intangibles that must be recognized separately. So in prior presentations, we talked about an acquisition process and the recording of goodwill and the calculation of goodwill. Through that process, you'll remember that we talked about the revaluation. We had to revaluate the assets and liability of the company that's being acquired to their value, and then consider that or compare that to the consideration that's being given. We can think about goodwill. Now, in that process, however, we might have some other intangibles that need to be valued at that time as well, other than just simply the goodwill. So, for example, we might have marketing related intangibles, things like internet domains and trademarks. So instead of just basically lumping everything up into goodwill, we got to say, okay, are there going to be marketing related intangibles like the internet domains and the trademarks that we need to apply some of that intangible amounts to? We need to value, in essence, those things as well, breaking them out from just basically a kind of a lump sum valuation of goodwill. So these are things we break out, their intangible assets. We have the customer related intangibles, things like customer lists are things that we can basically report as well. Artistic related intangibles, often things protected by copyrights, are going to be things that are going to be other intangible items. Contract based intangibles, franchises, licenses, and then we have the technology based intangibles, whether patented or not. So these are some other items that we want to make sure that we're considering within the acquisition process when we're considering basically revaluating the assets and liabilities, these being some intangible items that also need to be included within that valuation process.